In today's video, we're going to be talking about seasonality and how you can use it to improve your win rate when trading Forex, stocks, futures, etc. Let's jump in. All right, guys, welcome back to another video. Today, we are back in the EDGEFINDER and taking a look at seasonality. Now, if you're not familiar with what seasonality is, it's essentially just the concept of studying trends that occur during certain parts of the year, days of the week, months of the year, etc. And what we're going to be looking at here today is a really simple example. We've got the gold chart selected and we've got the seasonality data pulled up. Now, there's three lines that I want to direct your attention to, or three things that I'd like to direct your attention to. We have the white line here, the blue, and the red columns. And I'm going to show you how to read this chart. And in just a few minutes, anybody can be trained to use seasonality to improve their trading. It's really quite cool. Okay, so the white line is this year's performance month to month. So the way to read this would be, of course, in January, we had an up 4.1% month for gold. In February, we were slightly negative at minus 0.33%. In March, we had another up month. In April, we had a really nice up month. And in May, we had a down month, and in June, we had a down month. And so far in July, at the time of recording this, it is July 5th, the month has been negative 1.22%. Now, that's the first thing we just need to know. This line is our reference line. So the white line just shows how we're doing this year so that we can compare it to seasonally what we would expect month to month. So now we should take a look at the blue and the red columns. The blue and the red columns represent the last 10 and 5-year averages and average performance of a particular selected asset during that month of the year. So we would call this chart month of the year seasonality or seasonal trends. Now, if we read this really quick, January shows us that in the last 10 years, the gold market has averaged 2.6% gains during the month of January. That's January for every year in the last 10 years, on average comes out to 2.6. Now, of course, you might have down years, you might have up years, but the average is what we're really interested in. And that's where we get the 2.6% 10-year performance. And in the last 5, we have 2.45%. So this shows us that if you're looking at January, the month was expected to be positive, and we actually got the delivery there. We can also take a look at February. February in the last 10 years was expected to be positive, and this year it didn't quite deliver. We were essentially flat. But we go to March and we see 0.45% expected on the last 10 years, and we got 1.3. So this delivered. April, 0.82, 0.66. Those are our averages, 10 and 5 years respectively. We got 4.39%. So what you can see here is that now in the month of May and in the month of June, the seasonal trends was off, right? So we had actually a worse than expected outcome during these months. Now remember, it's an average kind of thing. Not every month is going to be exactly as forecasted, but it's a nice thing to know what the seasonal expectation is for each particular asset during each month of the particular year that we're in. So what this would tell us is that in the month of August, I'm not necessarily just going to go all in on gold and buy it just because the month of August is historically positive. But what I do know is that when we get these strong readings, it can be a nice added confluence to my trading. So if I do see that, hey, we're coming into August next month, and the month of August typically looks like it could be a positive month, I may consider looking for buy trades and seeing if my strategy marries up with that nicely. Again, the seasonal trends tab on the EDGEFINDER gives us a very nice confluence factor to look for trades that marry up nicely. Now, we can also see that if we kept reading for gold, we can take a look at September, October, November. These months historically have shown slight declines. So during this portion of the year, perhaps I'll be less inclined to buy gold and maybe even be looking for sells. Now, again, this is not enough to base an entire strategy off of, in my opinion, but it's a wonderful way to add confluence to your existing trading strategies. So when I look at September, October, and November, maybe I'm looking for sells, but at the very least, maybe I'll be more cautious on the long side. Now, again, we can see December is very positive in the last 5 years. There may have been a really strong run up that drove this on the 5-year chart, but on the last 10 years, it's about flat. So maybe during these times, maybe another one is July and December. Maybe I'm just more neutral. Maybe I don't really have a strong confirmation either direction on the trade. And in that case, I'll just stay on the sidelines of the gold chart if I'm reading seasonality when placing my trades, which personally I do very often. Now, again, on the EDGEFINDER, which is our software here at A1 Trading, we have all the different markets selectable here. So we've got things like the S&P 500. So if we take a look at the S&P 500, this chart has been very correct this year. Take a look at this. You can see May, June, July, all expected to be positive months, and they have delivered very nicely. Positive expectancy in February slightly. We saw a nice February. The last 10 years were about flat. We saw about flat on January. In April, we saw a slight positive expectancy. We got the positive move. So I love this chart, this seasonal trends detection chart from the EDGEFINDER, because it allows me to keep an eye on any particular assets. I mentioned S&P and gold. Those are two things that I personally really like to trade. But if you're trading other things, perhaps dollar, yen, we can also check seasonality of currency pairs. So you have all the things that you need all in one place here. And this allows you to quickly grasp an idea of what seasonal trends are looking like for all different particular assets. Here's euro yen expecting positive in these months, and boom, we got it. Now, of course, it's not perfect. You can see the white line just gives us this year's performance during this particular months compared to the average. And we do see positive expectancy during these summer and spring months, and we got them. So it's really cool to kind of take a look at all the different things that seasonality can offer to add confluence to your trading. If you would like this, as well as all of the other features that you see, I do have a playlist available for you to check out the other features here if that's something you're interested in doing. But if you'd like to get access to the EDGEFINDER, down below in the description, there is information on how you can do that. And subscribers get a discount. If you use code YTVIP at checkout, you'll be able to get a discount off of our product, and you can find out all the information that you need, again, down below in the description. If you'd like to get access to this product for yourself, again, we build these software tools here at A1 Trading. We're a software team that builds tools specifically for Forex, stock, and futures traders. So thank you guys for watching, and have a great rest of your day. Hey, guess what? I just found a video made just for you. Click this video to help with your trading, and thanks for watching.